Hey, what's going on, YouTube? So we just hit $40,000 on my investing portfolio, which is pretty awesome. I mean, it's crazy to think that just a little over 2.5 years ago, we just started this account with $100, and now we're sitting at over $40,000. Like, it's crazy. Now, obviously, the market can bring it back down under $40,000. Hopefully, that's not going to be the case. Hopefully, we just keep moving forward past that dollar amount. But yeah, we had a really good day this last day. We were up about $273. The last week we were about up 358. The last month we're up almost $1,600. The quarter we're up $2,200, which is a great reason to show people that dollar cost averaging, buying during the dip is so great because we were buying when things were getting low. The market was kind of down. Can it go back down right away? Sure, it can. But, this is just a great reason why, still staying in, not selling is a really important thing because, one, as a long term investor, we shouldn't be selling that often anyways. Obviously, there are, reasons to be able to sell. I've recently sold some stocks here as well too, but I wanted to move my account forward a little bit more. You can see in the year we're up about $5,800, and in total we're at $6,465 in total gains. Now, some of that's already been, claimed as far as gains, and of course, some of that is also earned dividends, which I do reinvest right back into this portfolio because I am focusing in on getting over $1,000 every single month in dividend income. That is just one goal, but I'm gonna plan on getting way more than that. I just know hitting $1,000 is gonna be a pretty big milestone. We're actually inching closer and closer to getting over, I believe, even $100 a month. Let me see if I can figure this out here. So what I can show you guys here in just a second. Let me see if I could. How can I do this? I'm gonna have to bring it up on the other computer for just a moment, or the other screen, I should say, and then I'll be able to transfer it right back over here. So let's do this. Okay, so I'm gonna bring this over here. So this is my dividend portfolio income tracker. That was a lot of words there. Let me close that up there. So let me just make sure I can see some stuff on screen here. Some of it's kind of cut off because it's a massive spreadsheet, which if you're interested in something like this, I actually have this for free in my show notes down below. If you guys want to sign up, you just put in your email and you guys will get one of these. So I put this together, and so what I'm doing right now is I'm keeping track. I know I'm zoomed out quite a bit, so you can't see too much of it, but the reason for it is right over here, I'm actually tracking how much on average I'm making every single month for whatever given year we're in. So right now, as of 2021, we are averaging about $32.77. That is including all of June so far, even though we haven't taken in all of the income just yet from dividends. So just something to kind of keep in mind. We still got a couple really strong dividend payers coming in for the rest of June. So this might tick up closer to almost $40-ish, which, we're just averaging it, right? Because if we zoom in now, so you guys can hopefully see a little bit better, right over here, what is that, April? We only made 1896, so it's obviously way lower than our average, but what I like to track is, how am I progressing forward with it? And this dividend tracker that I have here is just something to kind of help me get through that and keep it, kind of keep my momentum going as well too, because that's a pretty big deal. But yeah, I'm excited because what we're doing here is, obviously we care about dividends, but we're focusing on growth. We've talked about this before. If you've been following the channel for a little while, you know that we've kind of steered away from the high yield dividends, like 4 or 5% dividend yields. We're actually down to, what was it last time we checked? Let's go here. So a little over 1% dividend yield based off of the target percentages right now for my M1 Finance account, which is obviously way lower than the 4%. And then if I go to this account here, this will actually show me, this is relatively up to date. I think it's a little bit behind. So my current dividend yield is 1.11%, but my yield on cost, this is based off of how much I've already put in and how the dividend is paying out. I'm actually at 1.27%. So way below that that number that a lot of people look for. But that's totally okay because, yeah, we're in this for the long term, guys, like 14, 15 years from now. If we actually go over to the last week, we can take a look and see what's kind of been doing well. This is what I love about M1 Finance. If you're not familiar, this is the platform we're using. I have links for it in the show notes if you want to sign up. Gives you like a $30 bonus, supports the channel, which, I do these videos for free, but just a heads up, you can see right over here, I have these all split up so you can see that like our tech sector has done really well. Our growth has done fairly well as well too. Retail's been doing really well this last week, and yeah, just making sure it's in the last week. But it's funny part is like over the last like quarter, it's been down pretty significantly because of Home Depot and Ross, which I'll show you guys in a second. But our industries is down a little bit. Our finances is actually taking a pretty big hit, even though during the time where everything else in my portfolio was down, finance was up. So there's always this like balance of like something's higher, something's lower, and that's what I love about M1 Finance is that because of the percentages, it actually will dynamically invest more on the things that are down at the time versus whatever is highest. Because I don't know about you, and obviously you guys, let me know in the comments. I actually really want to know this. When the market is doing really well, and let's say you have one or two stocks that are not performing as well, but you want to hold them for long term, are you focused more on buying the stocks that are at their all-time highs, or are you buying the stock that is, in its red right now in comparison to the rest of the portfolio? Because that's what I do almost all the time. And a couple months ago, we had a company in our portfolio here called Lockheed Martin, and they were down pretty substantially for a couple of months. Let's see if I can actually... I won't really show it on here because I was investing so much more. So every time it hit like a low, I was just investing more, dropping a lot of money into that. And now that it's back up and in the positive for me, you can see actually a pretty big positive there. I'm not buying as much into this because I have other stocks now that are lower or not doing as well. So if I go to my portfolio on Seeking Alpha, I can go to performance. And what I could do is I could look at like the 5-day performance. And so I'll toggle this up so I can see like, hey, look, my finances are doing pretty bad because Ally is down almost 6%. We got some real estate stuff down as well too. There's, Discover is also down. So I look at these things, but then I could go to like the month and I could see what's down for the whole month. So we have like Ross and Home Depot. I mentioned those two for a while were down. Now they're doing really well over the last couple of days. So, they're kind of getting back closer up to the green. But before that, they were doing pretty bad. So to the point where I wanted to invest more than I was normally because why not get more value from the stocks that are down? So that's kind of what I was looking at. And I do this all the time. So like I've been investing pretty heavily into my Airbnb stock, which if we go back out here, we'll look into real estate, Airbnb. So you can see here with Airbnb, it's not actually down 14%. It's actually lower than that. Let's see. Officially unrealized gains, we're actually down 9.84%. The other thing is money weighted return. So it's a little funky because if I am investing, my initial amount when I first got Airbnb and when I put another like $100 or $60 in, that's why those numbers are a little interesting, where this is just purely unrealized gain. So I'm actually down $261 with Airbnb, but I've been buying it like a lot. So I'll show you here, Airbnb. Oops. Let's go here so you guys can see this. So like on June 1st, I put in 60, June 18th. I didn't put a lot in there. I think it just a little bit there. June 17th, $25. June 16th, $60. So you can see here just in the span of a couple of days, I was putting in quite a bit. $40 here, 30, 40, 200 at this point. This was definitely, you can see here, this was at one of its lowest points at $137.36. Now, some people might be thinking, if you haven't been watching the channel before, you're like, well, hey, Dennis, Airbnb doesn't give out, dividends, and that's true. But there's a couple different things. One, if in 15 years they don't start paying out dividends, because companies can start paying out dividends, I can take the profits of whatever I have from this and buy into like realty income and then get that 4.5% dividend yield. Or if hopefully Airbnb does start paying out a dividend, as of right now, at least I have about 16 shares with them. So, whatever their dividend's going to be, I'm already going to have so many shares of the company by that point that hopefully my yield on cost will be substantial in comparison. Because same thing happens with the stocks in my growth portfolio here. So let's go back to the week. So we can see here. So like our growth portfolio here, you can see I have Tesla, Amazon, Google, and Facebook. By the way, if you have been following for a little while, this is kind of exciting news for me personally. I hit over one full share of Google. So M1 Finance lets you do fractional shares, and the really nice thing is you can be buying in a little at a time. And so for me to finally get over a share, it's taken a long time. You can see my average cost is $2,009.99 for one share. The price per share right now on the marketplace is $2,500, so definitely up still substantially. I think in my all-time, I'm up $530. But that was just a really cool thing to finally hit, because for a lot of us as investors, it's hard to even imagine putting in $2,000 into an investment instantaneously, but to do it into one stock, like that's crazy. So I was just buying in slowly but surely over time. And I think if I go into my all time, it'll show me when I first got into it. Oh, that's cool. So almost at the year marker, I hit this because I hit this, I think, yesterday or the day before. So I invested into Google for the very first time on June 19th, 2020. And then it was like June 21st or something like that I hit the full one share. So it took me almost a year to buy one full share of Google. But, in that time frame, I've gained over $530, where if I had to wait to buy the full share, I would have obviously missed out on all of that gain over time as well too. So I like that. I think that's really cool. It's one of my favorite features of M1 Finance, being able to do those fractional shares. So yeah, things are looking good there. Let's go ahead and bring up the calculator here and let's talk about this $1,000 a month goal, right? Because that's our big goal. So right now we can see here, we talked about earlier, our yield on cost is about 1.27%. And we want to be, hitting some pretty nice goals here. So we're going to go onto this calculator here. Stuff pops up every once in a while, just a heads up. So we're going to put in 40,000 because that's where we're sitting at right now for the starting principal. Our annual dividend yield, this is what we just looked at. So it's 1.27 right now. It is in a taxable account. I'm just making sure things are on screen. And let's kind of put it a little bit more even there. And let's actually zoom in a little bit too. All right, so our annual contributions, it kind of sucks that we can't do like monthly contributions, just because I think that will be a little bit better if we can do it that way. But let's just go ahead and say we can do $1,000 a month, right? And this is just an example, so we'll kind of go through this as well. So expected annual dividend increases per year. Now, obviously, like I said, some of the companies I have don't pay out the dividend yields or dividends at all. Some of the ones I do have right now, even though they are low paying dividend yields, they have really high increases every year. So something like Apple increases their dividend anywhere from 7 to like 10% a year. Home Depot increases really significantly. Lockheed Martin, all those companies. So we're going to go ahead and say that on average, we're going to be getting an 8% dividend increase every year. Obviously, that's not always going to be the case, but just as an example. Distribution frequency, we're going to do quarterly here. Dividend tax rate, we'll just leave at 15%. And then expected annual share price per year, we're just going to be a little bit safe here. And we're going to just let's just do 9%, per year as far as growth. We are doing the DRIP, which is dividend reinvestment program. If you haven't heard that before, it's where you take whatever you earn from dividends and reinvest it back into your portfolio. And then we're going to go ahead and invest it for, let's just say 15 years, because that's kind of our goal here. And again, we can change these numbers later too. There's some of the ads. So we're going to go ahead and scroll down here. So this is where we're going to, there's the ad. So this is going to be what we see here. So after 15 years, we're estimated to have, on this example here, a balance of $612,000, or total return of 178%. Let me clean that up. Our average annual return is about 11.91. That's with the dividends and the increases that are happening. But obviously the big number we care about most is right here. This is the dividend income. So that's $25,000. So obviously if you break that down, that's $2,000, a little over $2,000 every single month. How much is it exactly, actually? Oops. Now I'm like moving all my extra stuff here. So let's bring this over. Let's find out exactly how much this is. Now, obviously, some of these companies pay out quarterly, so it's going to be a little bit different. But yeah, it'll be $2,088.89, give or take, obviously. And here's a really cool thing. So this is how much dividends we've gotten paid out in this example over the course of that 15 years. It's $96,265. So if you kind of add these numbers up, you get a majority of your dividends in that last year versus what you've gotten in that whole time. And then our yield on costs is about 11%. So that's way higher than, the 1% that we start off with in this example, but have it grow over time. Now, obviously, these are just fictional numbers. Obviously, your mileage may vary based off of what you do with your account, how you invest, all that good stuff. But that's for us right there to get to $2,000 a month. Now, we want more than that. Like $2,000 a month is great, but we want more, which also means, by the way, if we kind of scroll down here, it would be about year 12 to year 13 that we would be hitting the $1,000 a month, which is a long time away. But that's the whole point of investing long term. I know there's a lot of people out there with like investing in Bitcoin, investing in all these other crazy type of investments with like NFTs and baseball cards and all this stuff that are getting massive returns in a short amount of time. And is that sustainable? I have no idea. Maybe it's going to keep going for a long time, but I also want to plan long term as well too. I do have money for a little bit riskier investing, but when it comes to wanting to have dividend investments pay out, not guaranteed, obviously nothing is ever guaranteed, but to have a better chance of having that money at that time, I'm going to do it this way. And, obviously if you're following along, you'll see the journey here as we continue to grow. Obviously being at 40,000 here is fantastic because we started out with $100 at the beginning of January of 2019. So it's only going to keep growing here. And obviously as we compound and we increase this, it's going to just be that much more. And on this calculator too, if we wanted to, we can change these numbers up a little bit. If we want to do $20,000 a year into this account, that's going to obviously change things up pretty dramatically here. So you're going to see it right over here. Just putting in a little bit more per year is going to jump us up at the end of 15 years to $36,580 in dividends a year, which is obviously going to break down even more for us every single month for getting paid out those dividends. But again, that's all going to change depending on what we decide to do, how we set up our account. Look at this. Our end balance would be almost 900,000. That's a huge difference right there too. So who knows? Maybe we'll keep trying to plug in more every single year, so that way this account keeps growing and keeps getting even better. But I always tell people, if you want any of the resources we talked about today, I'll link them up in the show notes down below. Some of those do support me out financially, so I do appreciate it. But what I also want you to do too is click on this video right over here, so you can keep on learning and growing, so that way you're ready for your financial future. So my name is Dennis, and I'll see you in that next video.